This is going to be a fairly quick midday video, and there are some trends going on here. We have the inverse of the gold miners breaking down below prior swing low levels here. So we do have on higher than average volume a breakdown in our inverse gold miners. So gold is catching one heck of a bid today. Then we have IHE, your pharma, like your Eli Lilly's and your Pfizer and stuff like that. If you notice on our daily profile, this is a very poor profile on our daily. So just want to let you know that we are breaking out of a high volume point of control on our pharmaceuticals. So there's a very good chance we're going to gap down on our Pfizer's and Eli Lilly going into Friday. So those could be some really decent paying lotto trades for tomorrow, because the premiums are generally not priced for very much moves in Pfizer or Eli Lilly. And having this profile, you might actually, or Merck, um, get paid fairly well for a short possibility. Now, we are breaking down below this May swing low also in the pharma. So just keep that in mind on that one. IHE, TMV. The inverse of the 20-year treasury, the TLT, look what's happening today. Complete and total breakdown of the inverse fund. We have basically, you have to go all the way back to 20 January. Well, we broke that down too. So back to 2017 levels now. So just keep that in mind that the we have breaking the year. We are having a breakaway gap away from the yearly open 2018. So yeah, we are completely breaking down out of the 2018 levels on our bonds. Okay, IYM. Okay, February lows right here, and we're breaking down away from that on our U.S. Tech ETF, IYW, U.S. Tech. So basically, the Qs are in a lot of trouble here. In this Tech ETF, we are literally breaking the February lows on techs with that ETF. KOL, it's inside range. That's your coal stock hitting lows of the day. TNX, that means your yields are going down. There you go. See what's going on with your treasury yields? Total implosion in treasury yields right here. Not good, not good, not good. Especially for the regional banks, seeing stuff like that. NDX. Okay, your NDX, we're coming down. This is your NASDAQ composite. If you notice that ETF is already broken, that way it was a weighted ETF. It had already broken this prior support level, so this is not a very good situation going into tomorrow. I think you're going to see a breakdown of the February lows, gapping down on the Nasdaq. Very, very, very risky situation. Okay, so not a very good situation. We are at. I got a little note there, which I glad I had that. We are right here at the 125 weekly SMA. So and the 200-day, and that has found responsive buying in the past. So hopefully we don't break down and we just open flat. So this is a support zone, hopefully, that will maintain the Nasdaq. And then let's see here, the QQQs. That's also, I'm not going to put it to XSD. Okay, this below the 125 SMA weekly. And then we have the, okay, we are crashing down below our expected value area for this month. This value area was built out back in December. So we are coming down, crashing down to range lows, potentially trying to retest prior lows or even auction lower in the semiconductor ETF. XSD. Ugh, scary situation. I called it out in my video, didn't I? I sat there and told you it was one of the most risky areas to be in. And OXX. Yeah, shoot. And then tan. That one there. Maybe it's OXV. OXV. No, OVX. Maybe that's it. Nope. Can't read my writing on that. TAN. TAN. That's your solar ETF. It's inside range, but it's hitting lows for the day too. Okay, 1 second here. We'll go over to our SPY. What we're having here, we are crashing down to a level, a support level, and we are putting in value down here near the range lows today on our, if you go on our 15-minute, you'll see what I'm talking about. We are range supports, and the highest volume area to do business today is right here near range lows. Okay, this is our developing point of control. See that bell curve? And we are rejecting lower as of right now. So in my opinion, this right here is a volume point of control for 2017. Okay, it's the yearly value of control. And we are so close. Basically, we're looking at a range basically equal tomorrow as what we had today. And I absolutely think this is going to happen. This is a scenario the markets want to come down to the volume point of control for SPY tomorrow on the 2017 yearly. Okay, and then that is an accepted place to do business. And we'll see what happens tomorrow. I could be wrong, but that's my primary indicator. You're seeing the Qs putting in value at range lows and breaking range lows today. Okay, so just keep this one on your radar. Let me go on my daily first. We'll see how the monthly webs. Okay, we are breaking away from our monthly accepted point of control. This was built out back in December, and we are gapping down away from our highest volume for December, and at the range lows of the day, putting in value at the range lows of the day. So that tells me this is also coming crashing down, and this here has actually a lot more risk to the downside, in my opinion, because the volume point of controls are not. We haven't even put those lows in yet for the 2017 volume point of control for the Qs. So I think this is definitely coming crashing all the way down, retesting the lows of last year, their Christmas Eve lows. I honestly, truly think this is exactly the scenario setting up here. And then our IWM isn't really giving us nearly that indication here. Okay, we got overlapping values. We are at a buy zone, 2017 buy zone potentially here on IWM. So it has some relative strength versus the other major indices, in my opinion. But if all the markets come down, the Russell will come down too. So, but if you're going to get in any to the long side, your Russell would be the area that I would consider first and foremost. And I want to keep my video short, so I'm going to just, I'm not talking about individual stocks today. But to finish off with the diamonds, I think it is in a hell of a lot of jeopardy going into the first of this year. And I mentioned this on my weekend video. We have a horrible volume profile on this leg up. It was the last big momentum push in the markets to leg up in the diamonds. And here we are opening the month, and we aren't even getting up into the body of December. We are rejecting this body already and coming down. This is our 2017 build out for value, and we're coming crashing down to that. So we do have, there late in December, Christmas Eve and stuff, we just crashed right through that. This is actually resistance. It's not support. Okay, so it can act as short-term support, but technically that is a resistance area on the way for coming up. Once you come down into it, coming back up. And if you go on your shorter time frames, like on your daily here, you see This was our monthly. We were starting our month. This is our accepted volume point of control. And we came up into it, and we are rejecting as of today away from our monthly value that was built out in December. So that tells us the highest point to do business in December, which is a horrible month, we are starting to reject away from that. Okay. And finally, if you come down on your daily time frames here, the bell curve, you can tell it's a baby B, and we are starting to reject the downside on price. So the baby B pattern means that volume prices for the day are being accepted at the lower end of the range. That is typically a continuation setup, although we have a little bit of a good bell curve situation here. The primary continuation setups, see, like in this, let me see here. Where's an example? Don't really have one here to show you. But typically, whenever you get an elongated bottom cutoff, going into an overnight session, this is the after hour session here. But going into an overnight session, if you have this bell curve set up coming into the next session, that typically means you are going to have a continuation auction to the downside the next day. Okay. But we have more of a bell curve situation. So we'll just keep this one on our keep these things on our radar coming in tomorrow. I don't have much on the table right now. I do have one long in ALXN, Alexion, and that was based off of the Bristol Myers buyout of Celgene. And Alexion is another candidate that's out there. A lot of M&A talk about them merging with another company. So I do have some Alexion on that news, carrying it overnight just in case. So just keep this in mind. The selling pressure really looks like it's intensifying into the close here. So this could get really bloody on a Friday, first week of the year, and a bloody Friday setting up. So that's all I got to say, and I will see you guys tomorrow.